Welcome to the Stock Option Assassin's free video for swing trading options. My name is Eric, and in today's video we're going to look at a couple trade ideas for selling volatility. So first we're going to start with a chart of the VIX, and what we're looking at here is the VIX starting to kind of break its sort of consolidation. You can see our squeeze indicators indicating some consolidation. We're actually looking to the VIX is actually breaking out today. Kind of started to break out yesterday. So the VIX is spiking, and what happens when the VIX spikes is basically this is a measurement of put options being purchased on the S&P 500. So what's happening here is volatility spiking, so puts are getting to be more expensive the higher this goes in general. And so what we're looking to do is a way to take advantage of this with selling options. So what we're going to look at are two plays for selling out of the money put spreads on some big name stocks with liquid options. That's what we're looking for. So the first stock we're going to look at is Amazon. Amazon's been at a massive uptrend. You can see that kind of a reversal day yesterday. It's continuing to reverse. So just some basic technical analysis is going to tell us that we're going to have some support in these zones. This is where previous tops were. So we popped up here, we kind of consolidated, hit it again, consolidated, finally broke out. So what we're looking for is a retest of this zone. And right now that zone, I'm going to call it 370 to 373, somewhere in that zone. And the moving averages we can look at as well. I have an 8 EMA here, a 13 EMA, a 21 EMA, and then way down here is a 55 EMA. So this is just telling you how bullish Amazon has been. So what I'm looking to do is to see if volatility can continue to creep in Amazon and we get a pullback back into the zone. We'll call it 374, low 370s. And so if that happens, what I would want to do is sell a put spread below that and look for some sort of hold or bounce over the next week or two to collect some of that premium. So let's take a quick look at the option chain for Amazon. So Amazon, I'm looking at the December options. We have 17 days left till expiration. So this is one of the prime times to be selling monthly spreads is when you have 20 days or less. Now, earlier in the week and last week, we were kind of looking to start selling, but the volatility hadn't really spiked up, and we didn't, we were basically waiting for a pullback to sell these spreads. So, in our MTS service, we typically look to start selling spreads in that 15 to 20 day mark. So I like Amazon, first of all, because it has $5 wide strikes. You can see that the volume and open interest is pretty high, so it's going to be very easy for you to get in and out of these spreads. So anyway, so let's take a look at some theoretical pricing for Amazon if it were to pull back to let's say another $10. Right now, Amazon is about 383. Remember, we were talking about 373, 374, somewhere in that zone. So we're gonna look at some theoretical pricing there. So I'm gonna switch this to vertical, and this is gonna change this to a single vertical where we're selling one put and we're going to be buying a second put for protection. I'm going to change this to theoretical price, which is Theo price, and I'm going to put in here a drop, a minus of $10, and then this column is going to show you the theoretical price of that spread. Now, typically with 17 days left, I try to get somewhere around for a $5 wide strike spread, I'm going to try to get about $1. Now, the longer this goes, you may have to settle for a little bit less. And the reason why is because these options are out of the money and they will eventually go to zero if Amazon stays above that level. And so, as time gets closer to expiration, Theta increases, which means these options will decay faster. So every day that we're waiting, we're probably going to get a little bit less and less for the spread. So in this case, let's go back to the chart real quick. We were looking at Amazon in the 370s. So let's say if it did pull back to 373, let's say that happens tomorrow, then we would want to sell something lower here. Selling the 55 EMA would actually be perfect. So the 350, let's see what that looks like. So right now, selling the 355, 350, if it pulled back 10 bucks, we could only get 75 cents for it. But you could sell the 360 and you get closer to $1 at that point. So, we want to look at these two plays. And if we look at, again, selling the 355 puts us right into this zone, and selling the 360s here. I think either one of these is viable over the next couple days. Obviously, you need to know what your risk is and all that. So, but if we can sell the 363 and buy the 355 put for protection, and what we'd be looking at is potentially getting about $1 for that spread. If you want to go a little bit safer, you could try to get maybe 75 cents for the other spread, which would put you closer to 355 down here, and you'd be buying the 350 for protection. But basically, what we'd be looking for Amazon to do is come into this zone, hold, maybe get a bounce and retest the highs. At that point, we'd probably want to exit the trade because the trade would go, the options would go closer to zero. So we would look to maybe get $1 and buy it back for maybe 20 cents, something like that. And that's how we were looking to sell premium on any kind of pullback. And so why is Amazon a good candidate for this? Well, first of all, Amazon is, just hit this 52-week high. I'm not sure if that's an all-time high, but we hit a 52-week high. We're in the middle of a squeeze. So, this stock is very, very bullish. We have some seasonality going forward as well. This is a lot of this last leg up has been on the, Thanksgiving, Black Friday, Cyber Monday, all that stuff. Amazon usually does pretty well. Obviously, the big announcement yesterday was that they're looking for drone deliveries. So Amazon is hot right now, to say the least. But still, it needs to rest. And what we're looking for Amazon to do is pull back to this support zone and sell spreads underneath it. So that's plan one. Let's see if we can get that this week. The next one I want to look at is Netflix, NFLX. Very similar play. Amazon actually peaked back here after earnings, and then I think Carl Icahn came out and said he was selling a bunch of shares, but you can see that was kind of this weird earnings knee-jerk reaction. After that, Netflix has been in just very tight uptrend. So really, I'm looking for the same play. We're in a squeeze. We're above the moving averages. We're looking to pull back. We would have likely support here around 350. So let's do a quick analyzation of what a spread we could sell if we get a further pullback to 350. So right now, Netflix is trading at 359. We'll call it 360. So again, we go back to the trade tab. We drop $10. Oh, you can increase this a little bit, since actually not today. So anyway, you can change the date. So in the next day or two, we would look for selling something below. So let's say maybe the 340, 330 is probably not going to get that much for it, so far away. But again, okay, so right now, with a $10 drop, we would be looking for a theoretical price of about $1 for the 335, 330 put spread. Now, one thing we're not considering here is an increase in volatility. So you can see as we increase volatility, if volatility, as Netflix pulls back and Amazon, the volatility would likely increase, and you actually would get a little bit more volatility out of there. But typically, I just like to look at the general drop in the stock price for the theoretical price, because this volatility it adjusts too much, and it's hard to factor in there. So anyway, so we look at selling the 335. 330 put spread or the 330 325 put spread. So 335 puts us here, and let me make sure that was right. Yeah, 335, that actually looks pretty good. So any kind of move down into 350, we could sell the 335 330 put spread, get about $1 for that. And basically what we're looking for Netflix to do is consolidate there, and maybe it comes back in all the way to the 21 EMA, but we would look for some sort of retracement. At that point, volatility would get sucked out, and our options would get closer to zero. So those are a couple plays we're looking at. These are plays we're stocking in our service right now. But that's, I think, we're getting a good timing of the pullback, because the pullback is starting to happen, and when that happens, when there's 20 to 15 days left at expiration, you tend to be able to get a pretty good premium, and you can sell those put spreads. So those are two plays we're looking at. I hope that helps. You guys have a great day, and I will talk to you at the next update.